Number 1. The assets of Tiller Company are $480,000. The liabilities are $180,000. What is the amount of the stockholders' equity? So we're just plugging in, and we have the assets are $480,000 and liabilities are $180,000. And we're trying to solve for our stockholders' equity. So what did we get? 480 minus 180 gives us our stockholders' equity, which is how much? 300? Okay. 1/5 of the total assets, and the stockholders' equity is $80,000. What is the amount of liabilities? So what we're doing here, I actually don't like the way that this particular spreadsheet is set up, but we'll try to work with it as best we can. So we know, what are our knowns is what we're going to do here. We know our formula is assets equals liabilities plus stockholders' equity. So in this formula, what do we know? Tell me what we know. Do we know what our assets are?
No.
Not technically, right? But what do we know?
1/5.
Okay, our liabilities equal 1/5 of our assets, right? And we know our stockholders' equity, right? What's our stockholders' equity? 80,000. Now, if we put them all in same like variables, can you guys solve this problem now? Okay, so now solve the problem. I'll wait. Tell me what we did here. Tell me, somebody who solved it, tell me what you did. What's the next step? Good, Dan.
For SE, that was 4 to 5.
Say what?
SE was 4/5 of the asset.
Okay, so in other words, you isolated the A's, right? The assets, right? You got this so that you had 4/5 of A, right? Right? So you end up doing A, and you bring over the 1/5, right? Gives you 4/5 A, right? Is that what you did? Okay, so 4/5 A equals 80,000, right? Then to get the A isolated, you take 80,000 and then you're basically going to multiply it by 5 and divide by 4. Right? Algebraically, what do you get? 100,000. Okay? Is that how you guys did this or no? Did anybody do it with decimals? Who did it with decimals? Anybody? Alternatively, you could have done assets equals liabilities plus stockholders' equity again, right? A equals, what is 1/5 equal to in decimals? 0.2, okay? So you could do it like this, 0.2, plus 80, okay? Then do A minus 0.2A, which gives you 0.8A equals 80,000, okay? And then again, you divide 80,000 by 0.8, and again, you're going to get 100,000. So for some people, doing it in decimals is easier. Whatever way works easier for you, it's the same to me, okay? Again, just showing it to you my way. We're going to use and start with the basic accounting equation. What's the accounting equation? Assets equals liabilities plus stockholders' equity. Okay? And this problem is, at the beginning of the year, Helena Company's assets were $90,000 and its stockholders' equity was $50,000. So let's start with what we know. At the beginning of the year, so we'll put B here, beginning of the year. Their assets were $90,000. And the stockholders' equity were $50,000. We don't know what the liabilities are, right, per se, but can we solve for this? Can anybody tell me what the liabilities are? 40. Okay. Then the equation says during the year, assets increased by 60,000. So we have here change of 60,000. They increased by 60,000. So what do we know that the end of the year assets are going to be? What are they going to be? 150,000. Okay. So if this side of the accounting equation changed by 60,000, what has to happen on this side of the accounting equation? Has to change by 60,000, right? So we know that. During the year, assets increased by 60 and liabilities increased by 10. So their liabilities went up by 10. So the liabilities were 50,000. What's the stockholders' equity at the end of the year? 100,000, right. And if I were to say, what's the change then in stockholders' equity for this year? What was the change? 50,000. So make sure you know what your question is asking you too. Okay, this is the change and this is the ending balance. So make sure you know what the question is asking you, what's the change, or whether the question is asking you what's the ending balance. Okay, so do number 2 for me. SE6, number 2. At the beginning of the year, Alfredo Company had liabilities of $100,000 in liabilities and $192,000 in stockholders' equity. So therefore, their assets at the beginning of the year were $292,000. If assets increased by $80,000, so by the end of the year, I'm just omitting the zeros, okay, guys, just for simplicity's purposes. At the end of the year, their assets were $372,000. And liabilities decreased in this problem by $60,000. So they were $40,000 at the end of the year. What was the stockholders' equity at the end of the year? $332,000. How much did it increase by? Say what? Yeah, I guess, is that what it is? 140? Yeah, so the change was 140. Okay. Simple, just algebraically playing around with the accounting equation. SE13, apparently I did not put that in your worksheet packet. SE13. Orbit Company had net income of $30,000 in 2010. Revenues during the year were $220,000. Calculate the profit margin. Does anybody remember how we calculate? Oh, it is. Pardon me?
Nick, it's in the packet, by the way. Where? Right under 12? Under 12. Yeah, after 12 comes 13.
Okay. I'll let you guys debate that one. Can anybody just tell me what's the formula to calculate net profit margin? What's the formula for net profit margin? Thank you. Net income or net profit over revenue. Okay, I think it was one of the last things in your note packet. Okay, so what's the problem here? What's net profit? 30,000. Again, I'm going to omit zeros because it doesn't make a difference. If we eliminate them on both. 30,000 over 30,000, and what was the revenue? 220. So what's my net profit margin?
13.6%.
Okay, I'll go with that. 13.6%. SE8 on page 32 is, we're going to use the balances to calculate and prepare a balance sheet with the accounts in proper order for Globe Company at June 30th, 2011. We're going to use the exhibit on page 18, exhibit 1-1, as a model for what our balance sheet should look like. Okay, so we're down here. What do we start all financial reports with? A heading. So what's my heading going to be here?
Globe Company, balance sheet, June 30th, 2011.
Balance sheet, June 30th, 2001. Is that what it was? 11. 2011. Okay, so what goes on the left side here are our assets. And what are we solving for in this problem? What don't we know? Look at the data. Cash. So we don't know what our cash is. So what order do the balance sheet items go in? What should be first?
What did the order?
Cash. What should be second? Accounts receivable. And what should be third? Building. Okay. And on the other side of the equation, what should be on the as a liability?
Wages payable.
Good. Wages payable. I think that's the only liability. And what are our aspects of our stockholders' equity? Say what?
Retained earning and common stock.
Okay, so we'll put common stock first. Good. Common stock goes first, and then retained earnings goes second. And then we have our total stockholders' equity. And then we would have our total liabilities plus stockholders' equity. And we would have our total assets down here.
Do you always put it across?
Yeah, you're always going to put them on the same line. So plug in for what you know. Plug in for what you know. Okay, ready? Okay. So, we plugged in all the things that we know, and we have to do some calculations here. So what did we come up for our total liabilities plus stockholders' equity? $29,400. And do we know what our total assets are? $29,400, right? Because our liabilities and stockholders' equity have to equal our assets. So therefore, can we solve now for cash? What'd we get? 5,800. Is that what everybody got? All right, good. Don't forget to double rule. Okay? Good. All right, so SE7, Carl and Company had an assets of $280,000 and liabilities of $120,000 at the beginning of the year, and assets of $400,000 and liabilities of $140,000 at the end of the year. In this problem, we're combining the calculations of using the accounting equation and also taking into consideration now net income. So you've got to use multiple different formulas to help solve this problem. So that's why I want to do this one with you for the first time. Okay? So we'll start out our accounting equation with our accounting equation. Okay? Assets equals liabilities plus stockholders' equity. And we have $280,000 as our assets, $120,000 for our liabilities. And then therefore we can figure out what our stockholders' equity are, which is
Should we write the
$160,000.
these boxes? Should we write the final or the initial? We're looking.
Yeah, that's what I don't like. At the beginning, you're going to start out with assets equals 280,000. Assets are 280, liabilities 120, and then you figure out stockholders' equity is 160. Okay. And at the end of the year, I think it says assets of 400,000, liabilities of 140 at the end. So it's going to be a change of, we'll figure out the change here, but the ending, so this is the beginning, this is the ending, is 400,000. It says 140,000. And therefore, if we know this is 400,000 and this is 140, what do we know the ending stockholders' equity is? 260. Okay, so we know that. So now in this particular problem, we have to figure out, they're asking us, during the year there was an investment of $40,000 in the business and the company paid dividends of $48,000. What amount of net income did the company earn during the year? Now you would look at this and you would say, what? This isn't a net income problem. But what formula do we know that can help us to figure out what the net income is? Right, beginning stockholders' equity plus or minus net profit, blah, blah, blah. So what we need to do here is we need to calculate what the change is here. So we know what is the change in this number here. That's good. Okay, so we know the change is 100,000, right? So if we know what the beginning stockholders' equity is, let's use this formula. Beginning stockholders' equity plus net profit or minus net loss, okay, minus dividends plus contributed capital equals ending stockholders' equity. They don't say anything about contributed capital, so we're going to assume this change is zero. So, oh, no, my bad, they did. Sorry, they said a $40,000. Erase that. $40,000 change in stockholders' equity, in contributed capital. They said dividends of $48,000. We're solving for the net profit, and do we know the beginning stockholders' equity? 160. Okay. And we have the ending? 260, right? So now we're going to solve for this problem. So what do we have? 160 minus 48 is what? Say what? 88 plus 40? Oops. So it's 160 minus 48 plus 40, 152 equals 260. So we're going to say our net profit was 260 minus 152, 108. Okay, so our net profit in this problem is 108.